So next, we have an interesting panel discussion led by XJ, COO and co-founder at WhaleBlocks, an investment and consulting firm focusing exclusively on blockchain projects. XJ will be leading the panel on stablecoins, the future of crypto or the investor's trap. So please put your hands together and give a warm welcome to XJ and our panel of experts.
Hello. A very good afternoon to everyone. Why don't we get our panelists to shortly introduce themselves shortly, briefly. Yeah.
Hi, my name is Phantom. I'm founder and CTO of SovereignWallet. We also make one of stablecoin named MUI. We have a hybrid model of, it's basically algorithmic central bank, algo-backed stablecoin. But we also have another model. It's also crypto-backed. Our project, we're going to have a profit model, like a decentralized exchange and meta blockchain project, so that based on the profit that is accumulated and earned in this project, will be accumulating a central bank, and this asset will back the value of our MUI token. Thank you.
Hello, my name is Andre Kim. I'm a co-founder of Blockchain. Blockchain is an accelerator and investor from Korea. We started our company as a mining operation in 2016, and we started investing and accelerating from 2017. Thanks for having me today, and it's my honor to be here. Thank you.
Hey guys, my name is Alex, one of the co-founders of BXB Capital. We spent a lot of time back in 2017 arbitraging, making some investments this year. And right now we're working on a Korean won fiat-backed stablecoin.
Hi, my name is ANSON, and I'm the chair of the Blockchain Association here. I hope by now at least half the room should know what Access is. We have over 300 members, 200 corporate members. Collectively, they have raised 700 million in ICO. So definitely an amount that's not small. And hopefully we can use Access to keep empowering the whole crypto and blockchain community.
Hi everybody, I'm David Lee. I'm a professor from Singapore University of Social Sciences, and I'm also a co-founder of BlockAsset and invest in decentralization and financial inclusion blockchain projects.
All right, the first question to the panelists, what are your thoughts on stablecoins? Are you guys for or against stablecoins, and why?
Yeah, I'm definitely for stablecoins since I'm making it. And I think it's a natural evolution of cryptocurrency. We have early stage cryptocurrencies, but we have some problems. So we'd like to fix some of the price volatility and also how to answer the intrinsic value of this cryptocurrency. So I think it's kind of a hybrid or intermediary approach to create real crypto money in the future.
I'm against to stablecoin. The reason why I think like this, when we set the value must come from natural event. But the stablecoin is artificially made, so I'm against the stablecoin. Also, we haven't seen a lot of stablecoins are not stable. So example, like recently, like a USDC, when Bitcoin crashed, the USDC got pumped. How we can say this stable? So in my opinion, stable coins are just a trend in bear market. Yeah, thank you.
It's pretty easy for us to say that we're pro stablecoin as we're launching one. But I think stablecoins come in many different shapes and sizes. Obviously, we think that there are certain ways to do it with fiat back versus collateralized whatever. And I think that's a big piece of where the pros and cons of stablecoins.
Oh, I'm definitely pro. All sorts of coins that are doing what is they're doing good, most important, because If you think about it, how stablecoins came about, it was a manifestation of because the banks don't want to accept crypto companies. Okay, that's how all the crypto coins, stablecoins flourish. If it wasn't for, I have to say, if it wasn't for USDT to start off, the exchanges won't become that big today, right? So it's not really about for or not for. It's more like it is part of the evolution in the whole journey in the crypto space.
Yeah, I agree with Anson. I think stablecoin is innocent. So it's nothing for or against, but it's important to think of stablecoin of two classes. One is centralized, one is decentralized. So for centralized, it has its purpose, depending on who is issuing it, where is the risk is coming from, what is the purpose of that stablecoin? Is it for lending, for collateral? If it does good by reducing lending costs, then possibly it is something that we should promote. If it's decentralized, then we look at, especially the algo side, what are the risks involved and how we can actually use that to further the growth of the industry.
Okay, so stablecoins, as far as we see now, come mainly in three types: cash collateralized, on-chain collateralized, as well as elastic. Which type of these stablecoins do you think will be effectively able to maintain their peg and stabilize an otherwise volatile crypto ecosystem that we are seeing right now?
Okay, I think there is just some kind of concept confusion in the stablecoin field too. So some people say that fiat-backed stablecoin is a pegging coin. So I think pegging coin, we need to answer certain kind of centralization issue. So I basically prefer to have stabilization of crypto stablecoin purely based on cryptocurrency. So that's the way I think is the better way for the future.
Again, I'm against to a stablecoin, and sorry, I think none of them gonna be successful. I mean, think about it. Like a Bitcoin is at the early stage, right? So think about when you were young. Like sometimes you skip the class, you didn't listen to your mom, but as time goes by, you're getting stable. You got a family, you live on your life, right? So what I'm saying is like we need time to Bitcoin to be stabilized. So again, Bitcoin still at the early stage. There are like a lot of things to do. We need more time. Bitcoin is only like 10 years old. Okay, yeah, thanks.
I think that it really just depends on the purpose of said stablecoins. I don't know if Bitcoin will ever be a non-volatile type of coin or type of asset. So whether it's collateralized with fiat and then saying that that stablecoin is now accepted at a merchant because they can redeem that for $1 US, whether or not it's traded on the open market for $1 US, I think it's really about what can you do with that type of stablecoin versus if I have a algo-backed stablecoin, maybe that isn't paid to merchants, maybe it's within some other type of tech product used for a separate purpose. So for me, I think they each have their pros and cons again. We personally like the fiat-backed because I think that allows it to be more stable, to your point.
So I echo Alex in terms of Bitcoin because the premise is saying that Bitcoin will become not as volatile in the future, but I don't see stock markets being as volatile since the 1700s. If there are people that are willing to trade, buy and sell, it will always, the volatility will be there. We all thought Bitcoin was going to stay at 6,000. That's what most of the consensus was thinking, right? And guess what happened? So, and my other concern with the centralized ones, the premise there is that the banks will forever or very long term be okay with being the custodian for the stablecoin. Unless you have some sort of, I don't know, government backing or like what USDC has, they're licensed and audited. Even to that extent, there may be problems with the account if the Fed needs to change the rules. So, but it's definitely a good step forward now. We do need these stable coins, at least something that is backed and something that is audited rather than not knowing where the money is, okay? Because the biggest one today, we don't know. They may run away, we never know. right? But if something that is, we know it's audited and licensed, we at least have this comfort right now. But let's see how the whole ecosystem goes.
Yeah, I think when we talk about stable coin, the word stable, you need a reference point. Stable to what? I think if you look at it, is it stable to fiat currency? And the question of why do you want to compare to fiat currency? Is it stable to its own business model income flow? It could be just a crypto flow. The new coins that's printed, the income that you get from transaction fees. So the income flow is important. So reference to what point that we're talking about stability. That's first point. I think the other second point is that, is it a short-term stability that appear to be stable, but in the long term, there's a single point of failure that government can take it away. There's one possibility, or there's a business failure, there's a business risk, there's a counterparty risk, or are there other possible risks in the sense that there's no social scalability? So we need to clearly define what is short-term stability versus long-term stability, that you may have a false stability in the short term, but a major event that make it totally collapse. So we have to be very careful in trying to talk about stablecoin from the risk perspective.
I think just to kind of just say a little bit more on that, it really goes back to, is it stable because the underlying asset is actually fluctuating in value, or to what you were saying, is it because the market perception and how it trades on the open market is maybe making it not as stable? So I think, again, for it to be usable in business for merchants, they need to be able to redeem that underlying asset to the actual value of what they put out for it, right? If I have some cost of goods sold for $5 and I accept $5 worth of stablecoins, I need to be able to get $5 worth of cash.
Yeah, but like even now, like if you go to Japan, you can buy a camera by a Bitcoin, because third party, as soon as a transaction made, they guarantee the spot price. So I mean, why we need a stable coin to buy something? Yeah, because we're using it right now. Yeah.
I mean, so in a business like that, there are a lot of intermediaries that add cost. So whether it's spot price, are they charging a markup? Because even if you pay with Visa, they, across the world charge the merchants 2.5%. So if you have a service that doesn't require, markup to spot, or reduces the fees that are charged when you make that point of sale, you can either pass that on to the business in terms of savings, and then they can reinvest that, or for customers, they get other types of rewards and benefits from that savings as well.
I think in terms of Japan, I know it's very good news that they recognize Bitcoin, that they can spend, but I think that we need the guys like Coin and Bitfly to come out to show us what the transactions are today. Okay, because Bitcoin can only support 7 transactions per second, okay, or even maybe it can upgrade and become a bit more. But if the whole Japan is spending, I don't see how I will be very worried about the traffic on the coin. So to me, maybe if we need validation that people are actually spending with the Bitcoin.
I think one point I want to add is that we are always used to financial engineering. A lot of issues that we are talking about is about financial engineering. But a stable coin is a fintech engineering product. That means it's not only financial, which can be resolved. There is a technology risk element on top that we need to resolve, which I think we can too. But there's an added element of regulatory risk as well, because a lot of these coins are not within the regulated environment, so you're subject to another type of risk. So you're talking about in the long term, which coin will exist, you have to think about the sustainability from the tech angle, which can be resolved, from the finance angle, which is much easier resolved, but the regulatory issue is something to think about. You cannot have a coin that you think you can challenge the sovereign authority. You cannot have a coin that have to worry about the corporate business itself. That leaves off with decentralized stable coin, which have other issues as well.
Yeah, speaking of that, I think for USDC, they have a mandatory backdoor code that allows them to blacklist addresses and freeze tokens should they feel that your account is used for illegal activities. The situation is pretty similar with Tether and TrueUSD, which have clauses to say that they reserve the right to refuse service to anyone that they want to, without an explanation. What do you guys have any thoughts about all these clauses in all these few stablecoins?
Yeah, I would think that in the crypto economy or token economy, we are always talking about distribution of trust, not transfer of trust. The third-party trust is always very expensive because it involves human decision. So we need to think about trying to distribute trust as much as possible. It's impossible to have a distributed system without any centralization, especially off-chain. Off-chain, you will have centralized decision like what you have just said. But the idea is of decentralization movement in the token economy is try to reduce the risk of trusting a third party. And if we're trying to design coin that there will be more trust, just transferring the trust from one party to another is not a financial innovation to me.
So this is something that obviously we're actively making trade-off decisions on, do we include features like this, or do we go the route of, it's out there, anyone can do whatever they want with it. And the really important thing to know for any stablecoin, for whatever it's backed by, obviously there is some regulation sandbox or framework that needs to be kept in mind. So if you are within the US, or for us, within Korea, you have to take that landscape into account and making sure that you put in the right features in place to make sure that whether it's a central bank or the government doesn't look at you and say, you're just facilitating anarchy. Stablecoins are not there to just facilitate people to do whatever they want. They're there to help and solve real problems, like ANSON was saying, helping the projects in or the individuals within the crypto space allow to have some stable store of value because the banks were not there to store money. So it's really about what problems are you solving and how do you put the right features in place within your jurisdiction.
I have one thing to add on to that is that we need to consider the stability against long-term purchasing power. So we are pegging or backing our stable asset based on something that might reduce the value for the long term. Many of the fiat currency has this kind of problem. So we are backing our stability based on certain asset that may not be stable in terms of long-term purchasing power. So we need to think about how to solve this kind of problem. So I kind of want to focus, in our, one of the cryptocurrency research is that we need to create the real crypto money. That money has two characters. We are just too much focused on price volatility, but we also answer very important question of intrinsic value. How we can be stable against the purchasing power in the long-term stable purchasing power. Because we do not answer this kind of thing, then we cannot avoid price pumping and dump anymore. But if you can answer somehow, so and I think I agree with Professor Lee about decentralized central bank as a more, we can solve some of the trust issue. That there is no central point of corruption or central point of failure. So on the way of thinking about stablecoin, we should consider this intrinsic value of our backed up asset. And if we can solve this problem, we're going to solve the new era of cryptocurrency and really the crypto money in the future.
Correct me if I'm wrong, but I think USDT also has that function to actually cut the addresses. But then it depends on the intention of the maker, right? Are they really here to really catch the people? If your compliance is too strong, then you will lose the business on using your coin. Okay, so that there must be a balance. But you need to correct me, but I think USDT also has that function.
Okay, so with all these talks about the USD-backed tokens, we've been seeing an emergence of stable coins backed by a lot of different other currencies. Do you think these are needed, or will the USD-backed stable coins solve the problems that we are facing, and why?
Maybe I can start this one. So, this is a question that we get a lot, right? There are so many USD-backed stablecoins. Why does a Korean won stablecoin matter, or why is it needed? And if you look at USD as the world's reserve currency, yes, it's very much more widespread. But if you look at countries that have more capital controls, like Korea or India, Philippines, or if you look at even the EU, you know, every country has their own currency for a specific reason. And whether that's because they're trying to peg certain prices within their country, you know, to that local currency, or, you know, for Korea and a lot of the other capitalistic controls, you know, they want to have tighter controls on their currency. So if you look at, can USDC solve the same problems as a Korean won-backed stablecoin? I don't think so, because there are certain things that you can only do with Korean won that cannot be done with USD.
When I got this question, I asked about myself, like, why we don't have a stable coin pegging to Korean won in my country. And answer is really simple. Different to like other exchange in other country. In my country, we have a Korean pairs market. That's why Korean didn't feel needs of stable coins. I mean, stable coins pegging to Korean won. So I think that if like Bittrex, they open the like USD pairs market, US TED or USDC will be disappeared, I think.
Well, so Upbit there are some of the Korean exchanges that have listed USD-based stablecoins. Corbit has listed USDC. Upbit has TUSD, I think, and a part of that is, you know, if you're a Korean and you don't want US dollar FX exposure, then, you know, how do you park your money, or, you know, why are you using a USD, you know, derivative if you have an alternative in your local currency? And I think, you know, we've all talked about price movements of stablecoins. Well, in the traditional FX markets, US dollars, Korean wons, Japanese yen, their price fluctuates every single day. Every single hour, the FX markets move. So it's all about what are you basing that price movement against. So in an ecosystem where everything is pegged to, you know, a US dollar stablecoin, as long as the price movement between what you're buying isn't changing, then it's effectively like saying, I have a US dollar. Within the US, my $1 buys, you know, 50% of a piece of bread or a loaf of bread, right? So the price movements between currencies is very normal.
Yeah, I think that's important because let's just say one day Singapore has one, Malaysia also has one, and if it's a Malaysian that's borrowing Singapore dollars, and for the long term, and you know that it's only mostly going to go in one direction, right? So it's better that having local currencies with different use cases, I think is as important than just using the US dollars.
Yeah. So I think the function of a lot of fiat stablecoin I can see immediately is two, because they are both because of friction. Friction is because of capital control. That's one reason. The other one is because maybe it's difficult to remit your money to the bank and coming back. So these are the major reasons because of the friction between the crypto world and the fiat world. But if this friction is resolved, then the value of the stable coin may actually not be as interesting as before, because then you don't have to subject yourself to another layer of corporate risk that's in between the sovereign risk.
So, I think in the fiat-backed cryptocurrency, I'm basically a little bit against it, because if it's fiat currency is a legal tender, so sometimes it could be illegal because it's a monetary system, basically a national monopoly system. Only the government can issue the new currency, but if it's a packed currency, it can be considered as a kind of fake currency sometimes, and because there is a legal issue. So if it's backed by a certain fiat, but there is a central point of trust issue. some of the new stablecoin issuer, and we should trust them. But if it's not really legally backed, and what happens? Something like that. And also, if it's really fiat currency backed cryptocurrency, then I think it's much, much better for the government to really publish their own currency in a cryptocurrency format. So I think, and also another problem is that fiat currency, some of the fiat currency is not stable. Even though USD and those kind of major countries are okay, but if you think about some of the countries, we already have a financial crisis. So if that currency goes down and that currency-backed stable coin is not really stable, if you think about Venezuela, etc.
Okay, but government issuing stable coins and private enterprise issuing stable coins are two different things, right? Government issue stable coins is, they have exemption to a rule. I think we need to be careful in assuming that governments will not come with regulation on stable coins. Because FATF, Financial Action Task Force, is already starting to discuss about this. And likewise with the MES, whatever Financial Action, FATF, that's what I call it. If FATF issues something, MES will have to also follow as well. So this, I think, need to watch out. I think it's much more important that private enterprise really work very closely with the regulators.
Oh, one more thing I'd like to add is that one of the really reason for everybody seeking for fiat currency backed stablecoin is that they are looking for some kind of valuable asset that they can be backed on to prove the value of this stablecoin. And I think I'm kind of a crypto believer. So just like Alex and Andre mentioned that Bitcoin, I think Bitcoin can be treated as digital gold. So I kind of think that we can be backed up by some of the major crypto reserve currency to back up the value of our new stablecoin. And based on that value, if you can solve the problem of price volatility, and I prefer decentralized central bank, algorithmic central bank, then we can solve the problem of all these things.
So I think if you have a stable coin that actually with a reference point as those non-securitized assets, which are not being traded in the financial market or any of the market at this moment, that will be interesting. You could make a coin stable on whatever crypto income that you can generate. That's one way. Or you could be making the coin stable on a livestock that will give out, say, a cow, the milk, the calf. Then you are stable on the income that you get from the real world asset that is being tokenized. That's one way to think about it, but it still doesn't absorb you from a third-party trust because this is not just purely a virtual world. You have to work with other technology to be with the real world. But I think there are other interesting stable coins which actually we were talking about by affecting the supply and demand of the coin. You try to make it stable and make it decentralized. You can also make it decentralized in the sense to using smart contract and tying on with other things which are in the virtual world. So those are again, back to the point, when you say stable coin, a lot of people immediately in the mind is stable as reference to the fiat world. But why do you have to think about the fiat world all the time? The fiat world is really well serviced. The fiat world has its own problem. The fiat world has a lot of money to serve their own problem. They do not need the crypto world to solve their problem. Solve the problem that the fiat world are not interested in.
I think that last point is very pertinent because the public perception on the trust of the underlying assets is one piece, but the volume of liquidity or the trading liquidity in the market is another huge factor, right? Currencies, while they fluctuate, are traded at 100 times leverage traditionally in FX markets. So with that, when you have trillions of dollars of volume, that's also what smooths out prices. So when you look at the valuations of smaller startups, you know, even if you have a startup that has a very, you know, money in the bank, it's easy to assess the valuation. It's very illiquid. So some people might drastically overpay for that versus some people might drastically underpay for that. Same thing with bonds, right? So there are a lot of traditional financial products that are also only stable because there are so many interested parties. The crypto markets are a fraction of that. So without the same volume, it's much harder for it to achieve the same stability.
So I think it's important. I think you raised a very important point about liquidity risk. And the whole idea is that there are a lot of dead capital without liquidity risk. And if you can increase the liquidity relatively to previous, then the value will go up. And I think the reward from going towards this direction of increasing liquidity, marginal liquidity, the reward and the safety level is a lot more tend to get to engage in a very high liquidity, well-served, well-researched, well-funded, which I think the startup will have no match for them in terms of expertise as well as the kind of resources that they have.
Okay, that's all the time we have. Thank you all the esteemed panelists for their insights on stablecoins, and thank you the audience for taking time to listen to all of us. Thank you.
Thank you very much.